Hello to the first SEM students of KLS GCC Belgaum. In the previous class, we were dealing with difference between single entry system and double entry system in financial accounting. We have also studied single entry system, its merits, demerits, and so on. And now, in the first unit of financial accounting, we'll continue further with difference between statement of affairs and balance sheet. So what is statement of affairs and what is balance sheet? What is the difference between these two? First point, statement of affairs cannot show the correct, fair, true and fair financial position of the business, whereas balance sheet shows the correct, fair and true financial position of the business. So in case of statement of affairs, it does not give the clear picture of the clear financial position of the business concern. It does not give the true and fair view of the business concern. But when it comes to balance sheet, it gives the true and fair view of the financial position of the concern. It tells as to what is the amount of profit and what is the amount of loss being made. How does it show the true and fair view of business concern? This is because we prepare the trading and P&L and balance sheet of the business concern, and that's how, since the data is being analyzed in a proper manner, balance sheet does show the true and fair view of financial position. But when it comes to a statement of affairs, since you're just making a statement, you're preparing a statement, you're only using the personal and cash transaction and making the statement, and that's how it does not give a true and fair view of the financial position of the concern. Second point, the financial position shows by this statement is not reliable, whereas in balance sheet, the financial position shown by this statement is reliable. So in case of balance sheet, you can rely on the financial position, but when it comes to statement of affairs, you cannot rely on the financial statements that are being given by the business concern. Why you can't rely on the financial statements that have been given by the business concern? This is because you're not preparing trading P&L and balance sheet. You're not segregating the data in a given format. Okay, you're not using a proper method and segregating the transactions or the data, financial data. But in case of balance, when you're preparing a balance sheet, you segregate the data, you prepare trading P&L and balance sheet, and that's how you can rely on the financial statements. Why? Because it is giving true and fair financial position. But in case of statement of affairs, you cannot rely on it because it does not give the accurate financial position of the business concern. Next, it is prepared in case of single entry system of accounting. So this method, that is statement of affairs, is prepared in case of single entry system. But when it comes to balance sheet, it is prepared in case of double entry system of accounting. Okay, so balance sheet is prepared in case of double entry system of accounting, whereas statement of affairs is prepared in case of single entry system of accounting. Next, it is prepared by estimating the values of assets and liabilities except cash and personal account. So this is prepared, that is statement of affairs is prepared by estimating the values of assets and liabilities except your cash and personal account, which are not been included in case of statement of affairs. But when it comes to the balance sheet, here you prepare the statement in terms of taking extra values of assets and liabilities. It is prepared by taking extra values of assets and liabilities, whereas it is prepared only in terms of estimated values of assets and liabilities. Clear? Next. Now that's the difference between a single entry system, the statement of affairs and the balance sheet. Let's go for the next head, that is in terms of steps to convert single entry system into double entry system. Now, when we are preparing single entry system, once the data has been prepared in single entry system, and if you want to convert it into double entry system, There are 6 steps to be followed for converting single entry data into a double entry system. So what is the step? First one is you need to prepare the opening statement of affairs. So preparation of opening statement of affairs. Second point is you need to prepare total debtors account. Third, you need to prepare bills receivable account. Fourth, preparation of total creditors account. Fifth, preparation of bills payable account. And sixth, preparation of cash account. So if you want to convert a single entry data into a double entry system, then in that case you need to follow these 6 steps. That is, opening statement of affairs is to be prepared first, then you need to prepare the total debtors account, bills receivable account, total creditors account, bills payable account, and cash account. So you prepare the data in these form. Balances of each account is being considered in preparing the double entry system, that is in preparing trading P&L and balance sheet, that is in double entry system. So you prepare the data, that is if you want to convert the single entry system into double entry system, these are the 6 steps that are to be followed by an individual. Alright, so let's deal with the first step, that is statement of affairs. The first statement is statement of affairs. First step is statement of affairs. Now when you're preparing the statement of affairs, what does it contain? This statement contains various assets and liabilities of a particular day. Okay, so statement of affairs contains various assets and liabilities of the business on that particular day. Next, it is prepared to find out opening capital which is required in balance sheet. As I already told you, each account data at the end has been, whatever data you get at the end, the amount of that is being taken in preparing the balance sheet. So it is prepared to find out opening capital which is required in balance sheet. Next, the statement of affairs is based on estimates made by trader, and therefore it's not balance sheet even though it appears like balance sheet. So when we prepare the statement of affairs, you will understand that it looks like a balance sheet, but it is not exactly like a balance sheet. Okay, why it is not exactly like a balance sheet? Because it is based on estimates. It is estimated balance sheet, not exact balance sheet. So it looks like a balance sheet, but it isn't a balance sheet. All right. So let's see what is the format of statement of affairs. How do we prepare it? So this is the statement of affairs. This is the pro forma of statement of affairs. Please take down notes from this, that is from this point, that is steps to convert single entry system into double entry system. From here you write down all these steps. If you have already written the previous slides also, if you have written them, well and good. If not, please write them. Please make your notes ready. You also, if not those points, at least this you need to write, because this will help you in preparing the problems. Okay, so you write down this particular slide. Also write down this format, that is statement of affairs as on, and then liabilities and assets. So what comes in case of liabilities? You have creditors, bills payable, bank overdraft, outstanding expenses. And to the asset side, building, plant and machinery, furniture, investment, stock, debtors, cash in hand, cash at bank, and prepaid expenses. So this is your statement of affairs. Now, does it not look like a balance sheet? It does, right? But it does not. It is not. It looks like a balance sheet. It appears to be like a balance sheet, but it is not exact balance sheet. Why? Because this is an estimated balance sheet. So statement of affairs, and then the balance of this, that is capital, that is nothing but opening capital. This is being taken to the balance sheet in double entry system. So this is your first step, that is opening statement of affairs. This is your first step in converting the data from single entry system to double entry system. Now the second step is preparation of total debtors account. So let's see how is the total debtors account. So the second step is debtors account. This account shows the details of transactions made by the trader with his debtor. So it tells you the detail regarding what are the details of the transactions which are being made by the debtor by the business concern. Next, debtors account is prepared to find out either opening balance or closing balance of debtors or credit sales or cash receivable from debtors. Okay, so the debtor is one from whom you are supposed to receive the money. So the business has to receive the money from that particular person. So that person is a debtor. So here this account tells you what is the details of transaction, who are your debtors, what is the amount of money they are supposed to pay, what is the amount of bills being done. Okay, this you get to know from this particular account. Now this account, that is debtors account, is prepared to find out what is the opening balance of debtors, to know the closing balance of debtors, or to find out credit sales or cash received from debtors. All right. Next, balance of this account is helpful while preparing final accounts. So the balance of each account is being considered to prepare the balance sheet. Okay, to prepare the trading P&L and balance sheet. Next, so how does the debtors account look like? This is how you prepare the total debtors account. Debit and credit, debit side and credit side. Next to the debit side, you have two balance brought down, that is opening debtors, two credit sales, two bills receivables, bills dishonored if any, two sundry charges. Next, by cash account, received from debtors, by bills received amount, bills receivable, by sales returns, by bad debts, by discount allowed, and by balance carried down, that is closing debtors. So this account is basically prepared to know the opening debtors or to know the closing balance of debtors. It has also been prepared to find out the credit sales or cash received from debtors. So here you have credit sales or cash received from debtors. Either you will find out the opening balance, or you will find out the credit sales, or you will get to know the cash received from debtors, or you will find out the closing balance of debtors. This is why, to know these things, you prepare the total debtors account. All right. The next steps we'll see in the next class. Thank you.